I'm often asked where I would invest my money or how I would invest it or what would my ideal portfolio look like. And I actually have a sort of a different approach to a lot of people. So I believe that if you had say $100,000, my suggestion would be to put 50% of that into the stock market. But from that 50%, you don't want to put it all in blue chips because again, you're going to get the same returns as everybody else. But put, a little bit aside into high yielding income stocks, for example, but spread it across a couple of different sectors. But you don't want to be too concentrated in the big 20 companies or even the big 50 companies in Australia. You want to spread it right down from the big to the little. So from the blue chips right down to the speculative, tiny micro cap stocks at the other end, because that gives you a broad investment range across the stock market. Now with the other 50%, this is where you get creative. Put 10 to 20% of cash into gold would be a suggestion, for example. Some people would like 20%. They might have a more aggressive view if they're doing it. If you've got a less aggressive view towards gold, put 10% into gold. Another thing I suggest to people would be to look at putting a 10% to 20% chunk into cash for a couple of reasons. Some people sleep better at night knowing they've got a large chunk of cash in the bank. Other people sleep better at night knowing they've got just enough cash to cover, say, 3 to 6 months if something went wrong. That depends on their view. The other thing people, I think, should consider with that remaining, 10 to 20%, look at bonds, for example. Look at something that might have a maturity date a few years from now. But also too, I do think people should put a little bit aside for what I like to call your fun investment money. Now that doesn't necessarily mean you're investing in a company. You might want to invest in a friend's product that they're trying to launch, or you might have your own business that you want to invest in. So you should try and put some money aside into a great idea that comes your way. The point isn't just to dump everything into asset classes straight away. It's to make strategic decisions and actively invest along the way. Now, when I say actively invest, I don't mean invest every day. You've got to be, going through every single stock market gyration. I mean, invest in companies and make investment decisions that you can review periodically, but you don't just let them sit and forget and let them work for you, because that's really poor information. The whole idea is to manage your money, but make sure that you've got enough on the side that if a great investment opportunity came along, that you could go, oh, I've got some play money that I can put into that. There's a couple of ways to invest in bonds. So investing in government bonds, you generally do need to be an institutional client with a stockbroking firm. However, there's such a thing called exchange-traded Australian government bonds. So you basically buy and sell them through the Australian Securities Exchange like you would any normal share. So they're a good way to generate income, for example. Also too, some investors might like to consider corporate bonds with some of the big companies like Westpac, CBA, JB Hi-Fi, for example. These are generally all companies that offer corporate bonds. And you can talk to your stockbroker about accessing them, or if you're an institutional client for a stockbroking firm, generally they can help you access them as well. All bonds come with some risk. Let's just make that clear. Australian government bonds are generally considered the least risky asset in the marketplace, and that's simply because, the Australian government is unlikely to default at this point in time. Corporate bonds do carry more risk, and that's simply because you are investing directly in a company and then you're their creditor, for example. So they do carry more risk than government bonds, and they might even carry more risk than shares. But generally speaking, corporate bonds are only available for the top 30 companies in Australia anyway. So sort of we're in real trouble if our 4 banks start going over. So I personally have a very aggressive gold strategy, and it's not something I recommend for anybody. Now, one thing I would like people to remember when they're investing in gold is that it's a multi-decade investment. It's just like buying a house. You don't buy a house thinking you're going to be rich 2 years later, or at least that's the normal theory. In the Australian market, it's a bit different. But gold's a multi-decade investment. Now, the whole idea of gold is that it's a long-term wealth protection model. It's a way to, take your cash out of the financial system and ensure that your money isn't being eroded by government policies and inflation. And that's very important. So the returns you're going to see on gold aren't immediate. It's basically just, securing your money for future you and what your retirement might look like. Or also too, it's intergenerational wealth. You can pass it down to your children or your grandchildren. And that's what the power of gold is. Actually, that's one of the things with gold that people don't realize is gold protects your purchasing power. So just as an example, you talked about buying a suit then, back in the 1930s, an ounce of gold was the equivalent of a good suit. The last suit I bought was actually in 2008, and it cost the same of an ounce of gold back then. So, and I suspect if I was to buy a suit of equal quality, I would still need to spend an ounce of gold on that. And that's a really good analysis there, is that gold protects your purchasing power. So no matter what the government comes in and does and erodes your wealth with, central banking policies, gold will protect what you can buy with your wealth, essentially. And that's one of the things, gold is power. Whoever has the gold makes the rules. If you've got gold, you actually have power. It also means you're not reliant on fiat currencies. And that's the most important thing to remember with gold. And that's where I believe long term we will see gold come back into the monetary system, because we've spent, nearly 43 years in this fiat money experiment that we're all in right now. Gold will eventually take its rightful place as backing, maybe not every single currency around the world, but there will be some sort of dominant currency, and gold will have a tie into that, or I believe it will have a tie into that, to enable some sort of financial stability going forward. Do you know, generally all fiat currencies collapse after 40 years. 40 years. They have been tried time and time again, since even before the Romans. There have been several instances dating back, several millennia where, early governments have tried to debase currencies to stimulate monetary supply. And historians have shown us that they don't last longer than 40 years. So the fact that we're, 43 years or 44 years into this fiat monetary experiment means that it can't really run much longer. It's really only being propped up by government debt and belief in money now, like belief in the US government that it will continue to back the US dollar. China's an interesting beast. First of all, they only put out statistics they want us to see. And one of the ones that we don't see is how much gold they actually have. So the official government statistics for Chinese gold haven't changed in almost 2 years. So that's not a good measure of how much gold the government has. However, we can look at what's happening with private citizen accumulation when it comes to gold. Now, the Shanghai Gold Exchange basically shows us that there is more and more investors are buying gold, and they're taking it, they're not just trading it in China anymore, they're taking it out of the system to keep it home. Not only that, China produces nearly 400 tonnes of gold a year, and none of it leaves the country. It pretty much leaves in electronic devices, and that's it. So the fact that no gold is leaving out of China to go into investors' hand is a very telling sign that China is accumulating gold at a rapid rate, but they're not letting it leave the country. So that makes China a potential gold power, essentially. China holding all the gold gives them power, not so much that they'll be the centre of a monetary reset. There's still a lot of mistrust of the way their governments run. But what it does mean is they basically get a seat at the negotiating table. We're not talking about a backwater emerging market anymore. That's done. Because China has spent so long accumulating all this gold, they've basically bought themselves a ticket at the negotiating table, when eventually the elites, I believe, will have to sit down and try and work out how they can run this, the future monetary system in the future. China's basically bought their ticket at the table, so they will have a negotiating power there. Russia now has a larger official gold storage, I should say, than China. And they're in the process of dumping US Treasury bonds. Now, that's very important. They are actively ditching the US dollar, but they are rapidly moving that money into gold. So they are desperately accumulating, vast volumes of gold. And again, this will give them a position of power as well going forward too. This is what we do here. We look at all these numbers that we see coming through, and rather than dismissing the fact that Russia's accumulating hundreds of tonnes of gold per year, we say, well, why would they be doing that? They have vast oil reserves. They have vast gas reserves. It's not like they need a commodity to ensure their prosperity going forward. So why are they hoarding this gold? Why are they paying increasing costs to keep it nearby? It makes you want to know more. There's a bigger story there. Not only that, there's information floating around to suggest that they're working with China to ensure that they get as much gold as possible. So you want to know what's going on, and I want to find out what's going on so I can tell that story. One of my issues with the mainstream coverage of gold is it's almost like there's been an active campaign for people to disassociate gold as money. So my grandfather was born during the 1929 stock markets crash, and he was a huge advocate for gold. But yet by the time my father's generation rolled around, that sort of association of gold is money began to disappear. And that is, I can't help but wonder if it was a propaganda campaign, were we encouraged to put all our money in stocks to boost the economy rather than hold our money in gold, which is actual wealth. We don't read a lot about gold in the mainstream press. I mean, the Herald Sun is full of, footballers and property sales. That's all you're going to find there. But even with their financial analysis that they provide, it doesn't talk about gold. It talks about how to benefit from rising property prices or falling property prices and where to put your money in stocks. So as I said, they've disassociated gold as money, and this is something that has been an ongoing campaign. Like, they've drilled into people's heads that gold is worthless when, for several millennia, gold has been money and it has been wealth. People have been spending less and less money, and not only that, but wage growth is flat. So these have been signs that we could have been trickling our way in towards a recession, but we've had things come along that have propped up our gross domestic product, things like government infrastructure spending. There's been mini little commodity booms that have actually boosted our GDP data along the way. However, we're only now starting to really consider the idea that an Australian recession is very real now that property prices are falling. That's sort of quite visible in people's minds. I fully anticipate property prices will slowly fall for the rest of the year. I don't actually think we're going to have that catastrophic property crash this year. However, I do have a Twitter bet actually with a former colleague on right now. I believe we could be looking at a technical recession towards the end of the year. Now, a technical recession is where gross domestic product data falls into negative for 2 months in a row. 2 quarters in a row, 2 consecutive quarters for that matter. Now, in order for that to happen, I think it's going to be disappointing consumer spending. People aren't spending money, and with property prices slowing, that's going to compound that. People simply don't feel as rich as they did before, knowing that their house isn't worth as much before. So I reckon towards the end of this year, where the data is finally going to catch up sort of with people's thoughts and what they think, and that is that they don't feel rich. So yes, I do think we'll be looking at a technical recession later in the year. Well, I've actually said for 2 years, actually even longer than that, since the RBA cut rates back in August 2016, I have said since then that the next move will be down. And I've sort of been a lone wolf saying that the next move will be down. Now, granted, I did think it would happen earlier. However, consumer spending data was actually relatively robust. So there was none of that need to pull the trigger on lowering rates. In saying that, I honestly believe that this is the year we are going to see the RBA cut rates, simply as sort of an antidote to the banks reining in their spending, but also I believe they've been watching wage growth flatlining and savings flatlining as well. People are spending their savings as well. We don't have as much cash in the banks before. Plus, consumer data will turn out to be much weaker this year than I think we've seen in a long time. And I think these 3 things combined are going to corner the RBA and force them to cut the rate to at least 1.25% in the second half of the year. But if Australia does enter into a technical recession, we could see interest rates down at 1% by December. The fallout effect of that is it will flow into property. Once again, this is where I believe Callum, my colleague, is right, is that if the RBA cut rates, it will find its way back into the Aussie property market and prop that credit bubble up once again. Oh, look, you know what? It's just the same monkeys in power, isn't it? I mean, this is our real problem. Like, when we go to vote, we're really just looking for the least worst muppet to be in charge. And, then it doesn't matter, they get ousted 12 months later anyway in Australian politics. Look, there is one of the things that I think people need to watch out for, at least I'm reading a lot about it, is the Greens in particular are picking up a lot of momentum. And they do have a lot of socialist policies. Now, I don't know what your view is, but a lot of those socialist policies could mean that there will be an increase in government debt. However, I don't want to sound too alarmist on that, because Australian government debt levels are really quite minimal compared to other countries. What will be the centrepiece of this federal election will be a lot to do with property. Unfortunately, I think the federal election is going to hog the news, and I think the negative gearing or the no negative gearing or the rising property prices or the average working Joe, I think we're going to be bombarded with a lot of that noise coming at us. And I hate to say it, but I think at the end of the day, none of it's going to matter. When it comes to the federal election, do you know what I'm looking for? People just to get in there and leave us alone. Stop coming up with schemes to try and protect people. Stop coming up with new laws. You know, one of the problem, whether it's going to be Labor, whether it's going to be Liberal, whether it's going to be the Greens, there's this continuous onslaught of new policies and new legislation which essentially erode our freedom. So it doesn't matter what, you know, their tentpole legislation is that they walk in there with. All they're doing is coming up with new ideas just to infringe on our liberties. So this is what I'm saying. It doesn't matter which political party gets in. Either of them, they're still going to come up with new ways to infringe on our liberties, and that is my issue with the government. So here's what our mission is at the Daily Reckoning. Small government, and essentially a government that isn't going to come in with new ideas on how to stop you from living going about your life and your daily freedoms. Sound monetary policy. So that's through not manipulating the value of money and the value of credit in the system, or propping up credit bubbles and inflating people's worth. And not only that, we advocate looking for the ideas that people can't see because the mainstream is too busy caught up in this news cycle of only telling you a small portion of information, and rather than giving you a little bit more information that would enable you to make alternative investment decisions. In short, all we want here at the Daily Reckoning Australia is for the government to leave us alone, the regulators to allow us to seek out alternative information and give you the power to make alternative investment decisions, because we know you're the best person to make those decisions when it comes to managing your money. You should be given information that helps you look at alternative investment ideas, because not everybody wants to invest in a bank and not everybody wants to throw their money into BHP, for example. Some people like to put their money into more speculative companies, or some people like to put their money into emerging tech stocks. And one of my criticisms of mainstream financial advice is they're too busy trying to push everybody into one direction. Well, that's not fair, and that's also not going to generate any real wealth. It just means you'll have the same expected returns as your neighbour. Well, that's not okay. The whole idea of growing your financial wealth is that you want to do better than other people, and you want to just do better for future you, not just get the same, 2, 3, 4% compounded return. It might be easier for the regulators to oversee everybody if they're getting the same financial advice, but that's just lazy on their part. We should be able to search for alternative information that we believe benefits us. Now, my role here is to give people that alternative information so they can make that decision for their financial future. Thanks for watching. Make sure you subscribe to our YouTube channel for more video updates. Plus, right now, you can get a free guide to investing in gold. It's called The Best Way to Buy, Sell and Store Gold in Australia. You'll learn how to decide on what type of gold to buy, which Australian gold dealers to trust, whether you should buy bullion or ETFs, and the best and cheapest way to store your gold. All you need to do to get your copy is to click the link in the description below, or go to thedailyreckoning.com.au/gold.